Hey, it's Samantha Hartley of the Profitable Joyful Consulting Podcast. This is season 12, and we have been talking about consulting skills and successes and way to be more successful in your consulting business. So all the shows this season are dedicated to success factors, and financial success for consultants is the topic of today's conversation. Now, I've been covering financial literacy in past episodes, and I wanted to bring in an expert who could help me have a conversation in which I can ask all of the questions, all the very, very basic questions that I think a lot of us want to know. I'll be your representative on figuring out how can we make this business more profitable. The profitable part is critical in addition to the joyful part. So for that, I have invited a guest, and her name is Hannah Smolinski. Hannah Smolinski is a CPA and the founder of Clara CFO Group, a virtual CFO agency providing small businesses with financial clarity and profit maximization strategies. Her experience working for one of the world's largest accounting firms inspired her to make corporate expertise accessible to small business owners through fractional CFO services. She also hosts a YouTube channel with over 36,000 subscribers and uses the platform to help small businesses achieve financial success. I'm going to ask her all about this financial success and about that YouTube channel in this episode. Take a look. Awesome. Hannah, welcome.
Hi. Well, thank you so much for having me. I'm excited to be here today.
I'm a big fan of your YouTube channel. You have the most helpful reels. There's like everything that someone would want to find out about running a business from the financial aspect is in your videos, as far as I have seen. So I just have a million questions for you. But what I wanted to start with is, I love stories of transformation. And so if you could demonstrate, model, share with us what you do through a story of a client that you've worked with and like what things were like before, and then what you did for them and what was the transformation that occurred.
Sure. Yeah, I'd love to share. So we provide CFO services, and that's on a one-to-one level. That's largely what we do in the agency. And so I have a story from somebody who came to me during 2020. So during a very difficult year for a lot of consultants. And this firm came to me, and it was actually just two owners, co-owners, 50-50%. And they were the ones who were doing all the work. They were doing strategy consulting for mostly nonprofit and some companies, but a lot of nonprofit companies or organizations they were working for. But what was happening is they were working really, really hard and just barely covering their expenses. And actually, they were a little bit in a loss position. So I know this is not exactly what we want. That's not what I want. That's not what you want for anybody. So what we did is we were started to break down like, really, what are they doing? And we addressed the first problem first, which was pricing. They were clearly not pricing themselves correctly because they were working really, really hard and not having anything to show for it. So that's a really good indicator that there's not a good pricing model. So we worked through that, and then we started to work through, okay, what do you guys really want with your business? Do you want it to be just the two of you, or do you actually want to grow? And they decided that they wanted to be a boutique agency. They didn't want to be 100, 200 people, but they love the idea of running a business that had about 10 people in it, that they were doing really great work in the world, but they could still control quality and be really involved. So we started to essentially build that agency. And so we've been starting to identify positions, what we can outsource right away. And they started to bring on full-time employees. And we really love that model of when you can build a business on full-time employees rather than just piecing together labor with contractors here and there.
Okay.
So we were able to do that, and that created a lot of labor efficiency for them. So they were able to grow 75% in the first year that we started working together. And then super exciting as they just landed a couple $1 million projects. So we are loving that for them and really starting to figure out how we get the next 2 or 3 people in the door. And it's actually become a problem where it's not revenue that's the problem anymore, but it's actually how do we find the right team members and bring them on? So we're redirecting marketing dollars instead of driving marketing dollars towards new customers. We're actually driving marketing dollars towards getting great people and keeping and retaining them and putting financial resources there. So
awesome.
Yeah, I love it. And it's exactly what we want. We're building their business to be really what they want at the end of the day. And they're starting to see the financial returns on everything that they're doing.
Terrific. And it's, I'm sure others will hear so much and recognize so much of like the common issues that are happening with everybody. And you're working at a very high strategic level with them if you're looking at, moving marketing dollars and investing in team instead. So that's the fractional CFO service you provide, right?
Correct. Yeah. So we're doing fractional CFO, which we call that like it's only strategy. So we do financial strategy. We're not doing the bookkeeping for our clients. We're not doing their preparing their tax returns. We make sure that they have great people in place for those services, but we're not doing that work. We kind of focus on, okay, that work is done. Now what?
Yeah.
And that's where we step in, where we say, great, that's what happened. Now, how do we translate what happened into what are the next strategic steps that we make? And that's a lot of hiring decisions, doing return on investment calculations. We are always looking at profitability. Is there a business segment that's not profitable or one that's more profitable that we really need to dive into? Return on marketing, all of that kind of stuff.
So those are great areas. Like, can we afford to hire? Is my marketing actually profitable? Is the business itself even profitable? And you and I had talked about this a little bit earlier. The idea of a lot of my clients are, I call them on the path to 2 million. So some come in the low six figures, and some are already in the 1 to 2 million. But if we just concentrated on somewhere in the middle, like about 500,000, what are the concerns of business owners, or what should they be, the financial ideas and concepts that they should be thinking about in the $500,000 a year level?
That's a really good question. One of the things that I'm seeing is, first of all, people are not knowing their numbers enough to know what they should be doing next.
Yeah.
So I always recommend, like at the very base level, start to really get familiar with your numbers. And you don't have to be an Excel wizard. You don't have to love every single financial report. I always say, like, it doesn't have to be complicated just to be able to know your numbers, and getting really familiar with, like, what is your revenue, which is the very top line, all the money coming in. Then what is the bottom line? And that's the profit. What do you have at the end of the day? And getting really familiar with what that looks like, and then understanding, is it enough? Because what we're finding more often than not is that usually profit is not high enough at that revenue level. And it's a challenging place to be, actually. Yeah. So I just recently spoke to a group of entrepreneurs that was in this space between $250,000 to $1 million in annual revenue.
Yeah.
And it's a difficult place to be, because it's usually it's probably beyond you at that point. You at least have a couple people on your team, and you probably have a lot of pulls on where your money should go. You have a lot of people like saying, hey, I'll help you over here. I'm the solution over here. Or maybe if you just invest more in marketing, it'll, fix all your problems. So you have a lot of places to go and things that you could be putting your money in, but it's really about, how do you put your money towards something that's going to be the most efficient for you and will produce the most value on the other end.
Yeah.
And that can be kind of hard. Sometimes there needs to be some trial and error. So really, like, keeping an eye on things, and hopefully meeting with somebody monthly who can kind of help you before you get down a path where you've spent tons and tons of money that maybe isn't, producing a return, would be a good thing to do. But I think getting comfortable and understanding your numbers first is like a really great foundation.
So what numbers? You said revenue and profit, but like, what specific numbers should I be looking at every single month, for example?
So top line revenue is obviously a great number. Like we like that.
I feel like most of us like know that number, because that's like the one that's kind of easy. And even if you like don't have any skills at all, you can look at your bank statement and be like, here were the deposits for this month.
Yeah.
So, and I don't say that to be insulting. I just feel like, well, that's the one that's kind of like accessible to us, even though I do talk to people a lot of times who don't really know what the revenue is. But anyway, let's assume that that's the one. And then
the next thing we would be looking at would be, I like to have some type of understanding of your monthly expenses. Like, what do you have to be spending every single month? And you might call this a burn rate. You might call it, OpEx. You might hear people say, what's your OpEx spend? And then if you're saying that means operating expenses.
Okay.
And that just means, what does your business need to operate? Do you have rent? Do you have utilities? What's your software costs every single month? Do you have employees? And if so, like, Is that $10,000 a month? Is it $15,000 a month? It's really good to know like, what is your spend? Because then you kind of know like, what is my break even? Like if my spend is $25,000 a month in my business, I have to bring in at least $25,000 a month or I am going into the red.
Yeah.
And it's a really good number to keep in mind when you're trying to make decisions about your business, or if you're trying to say, can I bring on this marketing consultant who's going to cost me $5,000 a month? That's bringing up my OpEx from 25 to 30. What does that mean? That means I need to be making at least 5,000, but hopefully that would be amplified to, 10 to 15 at least, if you are bringing on that much extra marketing expense. But it's really good to keep that number in mind. Like, what is my flat, you can average it out. What is the average monthly spend that I need to make? Another thing is your profit percentage. So profit percentage would be taking your profit and dividing it by your revenue number. So profit percentage, at the very minimum for a service-based consulting business, we need to be looking at least 15-20%.
Okay.
And that's like before, and that's hopefully you're already factoring in a salary for yourself at that point in time.
So you were considering yourself an operating expense, or is salary and team expenses separate from OpEx?
I consider it operating because you would be paying it regardless of what's happening.
Okay.
So you're going to be paying yourself a salary. You're going to be paying your team a salary. I call that. Now, some people might say, okay, let's put this up in direct labor and that's considered cost of goods sold. If we want to get really like accounting nitty gritty.
We do.
But most small business owners don't separate out their finances that way. And it's all of their payroll is going to be sitting in operating expenses. And so I like to make sure that you have a high profit percentage, at least 15%. 10% is considered the new break even. If you read Greg Crabtree, his Simple Numbers book is really great for anybody who's looking to increase their finance knowledge. His book is wonderful. He considers 10% the new break even. And I would agree because you need to have some flexibility. And the only way you have flexibility is by creating profit in your business.
So break even is no longer how we hit zero. It's a 10% of usual revenues, 10% of operating expenses, 10% of what's that 10%?
Yeah, 10% profit. So that would be like at the end of the day, revenue comes in and you need to have at least 10% left over after paying all of your expenses. And the reason that you need that is because profit has to do a lot of work for you.
Yeah.
So profit needs to cover any kind of owner's draw that you take from the business. So even if you are paying yourself a W-2, if you have any kind of additional shareholders distribution, you need to be able to pay yourself out of profit. You also need to be able to pay taxes, and taxes kind of come up first, right? We got to pay, pay the man. And then any kind of reinvestments you want to make into the business, or, let's say you want to redo your website and you need to redo that every 3 years, or maybe you, have a big asset you need to purchase for some reason, or you want to make a down payment on a building eventually in your business. All of that needs to come from, the only way it comes is through profit. And then you need to have savings. If you don't have cash savings, that comes from profit. And then any debt repayments, that comes from profit. So your profit really needs to be working hard for you. So what I find is that people are typically not focused on profit and they have kind of bare minimum. And then at the end of the day, they're like, wow, I might have $1 million business, but I still don't have any money.
Yeah.
And that's what we don't want.
Right. Well, and that's why we're talking to you, because I've talked to many people and that, I'm working with consultants. And so it feels like everything that we do is so profitable because we don't have like the fleet of cars or the building or overheads. So a lot of those overhead expenses are not the case, but I have worked with so many consultants who are running almost all of their personal development through the business. So it isn't just marketing consulting, it's life coaching, which is a totally valid to me expense because the better you are as a person, the better your business is. And I think their idea is as long as I don't overspend the total amount that I have, then I'm doing okay. And as you're saying, you're saying 10%, and I'm like, I think we need way, way, way more profit than that. I'm like 30, 40, 50 for a service business, for a consulting business. So I'm glad that you mentioned, there's so many things that I'm so glad you mentioned. I'm so glad you mentioned paying yourself a salary, because I think this is a thing, certainly by $500,000, most of my clients are paying themselves a salary. I feel like the place where we get caught up is not allocating enough to taxes. And so is that something that we should rely on a CPA to do, or is that something that you're helping your clients to do?
I do help my clients estimate what they need for taxes. And I actually have a really great download that I'd be happy to share with your audience for kind of planning for their estimated tax payments. But it does kind of back into what is your profit, and then what is your, estimated tax rate. And you can usually figure that out from your prior year effective tax rate. So it might be somewhere, I always say it's going to be somewhere between 20 and 25% with any kind of significant tax, profit, or any significant profit. But, you might be in a situation, if you're in $1 million profit situation, you might need to bump it up. And that's where you might need to have a conversation with your CPA. But, estimated taxes, you just want to keep an eye out, because they can really come and hit you. And if you've taken all of the profit out of the business as a distribution, you are going to be responsible for all of coming up with that cash. And what I like to do with clients is I like to have them save the money for taxes in the business and have that be a separate activity than what their draw is, that can go straight into their personal bank account and they can spend it as they want. I hate for them to take it home and then they have to hope that it's going to be enough that maybe at the end of the year it's going to pay their tax bill. So we do savings in the business, and we usually set up a separate tax savings account for that.
Yeah, I super want to emphasize that. It's something that I've done in my business in the last year. It made 100% of a difference, because once, once the money had come through, I'm an S Corp. So once that money had come through and was in our personal accounts, I was regarding it as something entirely different than when money is in my business account. I just have a kind of a different point of view when I'm working there. Earlier in the season, I have done an episode on just financial literacy, some very basic things that I taught myself, because I wanted my listeners to hear the kind of non-expert version of this stuff. And I'm very gratified to hear you repeating some of these things. So paying yourself a salary, not commingling your accounts, having distinct business and personal accounts, and not letting those get intermingled in any way whatsoever. The formality of keeping those separate at every level of your business. And again, it seems like the kind of thing of like, well, that's a baby beginner kind of mistake. I'm like, no, I've seen that at very, very high levels. I've seen people commingling their monies. So it's like, well, the business didn't have enough money, or I didn't have enough money, so I had to dip into it. I'm like, whoa. Okay, so my clients and listeners to the show will know that you have touched on one of the things that I'm very big about, which is not hiring employees too soon. So you were emphasizing the value of hiring employees. So I'd love for you to talk about your point of view on that.
Sure. Yeah. I mean, and I would say most of the time, the first step into hiring labor is going to be hiring a contractor. That's almost always what I see. And that's what I did myself. I hired a VA when I first needed some administrative help, and I wasn't really sure exactly what I needed. So I was like, we'll just start outsourcing some tasks. Right. So I did that myself. And then I even started with, once I kind of needed a little bit of bookkeeping help, for a client, I hired a contractor to do that. I started moving people more into employee roles, mostly because I like the idea of having more control over what exactly they do and their set processes. And there's a lot of legal formalities between what is a contractor and what is an employee.
Right.
But one thing I'm starting to see as you get to this multiple $100,000 level into the millions of dollars is that you need to be reliant on your labor as you grow. And the thing with contractors is that typically, they're running their own businesses. They're not necessarily, you're actually not their first priority.
They should,
their business.
You should not be. Yes. Any contractor, their business should be their first priority.
It's their first priority. So I see people who, you have potentially a lot of churn with contractors, and then from a financial perspective, you're also paying a higher rate for what the work that they're doing, because you're actually baking in their profit margins and their overhead into the rate that you are paying them. So what we're starting to see, and I work with some marketing agencies and stuff, and this happens a lot in marketing agencies, is that if we move a role internally, we're getting 3 or 4 times the capacity for the same price. And when I hear capacity, that tells me I can go out and sell more services. So
Absolutely.
that's where I see there's a switch. So you might be building your company for a certain amount of time, but will become a time that the volume makes sense to bring it internal, switch it to employees, and then all of a sudden you've got the capacity to really like amp up the agency. And again, that's if you're growing an agency and actually like wanting to have or like a consulting service business that you want to have a lot of available hours that you can go out and sell more work.
Yeah. Great distinctions. So first of all, legally, there's a very big difference between contractors and employees, and everybody has to do their own homework on that because I cannot get into that. And I know California is very strict about it, but and so if you're out there, you're going to know your own rules. But it has a lot to do whether the contractor has other employees and all of those things that you mentioned. But I think the piece that's super interesting and the example that you used of marketing people is marketing skills are super marketable on the open market. And so it makes total sense that marketing people are going to be disproportionately expensive if they are doing work for you. And if you are going to take that asset of a person and then bill them out and create more revenue from them, then that totally makes sense. I'm surprised because a lot of the benefits and the things that you have to pay that make that person more expensive in some ways than contracting. I mean, I can imagine if that's if you're an agency and that's a full-time role. And I do have, there are plenty of people that I'm working with who are have consultants, and they bring those consultants on staff, or they have other team members who are only working for them for their clients, and they really want that kind of dedication and focus. What I've always said is do not hire employees when you're still struggling to pay your current bills, and especially to pay a salary to yourself. And again, believe it or not, I've worked with businesses that were as large as $600,000 a year, and the owners were still struggling to pay themselves consistently. But that employee always gets paid. And I'm like, make sure that you can always pay yourself first, and that you have the ability, and also that what the employee is going to be doing. You have a really clear plan for how you are going to maximize and monetize those employees before you bring them on.
Yeah, I would agree. I think that you probably would want to look at your labor force currently and see what of those roles that's actually happening that's being maybe even done by 2 or 3 contractors. How can you leverage that one or those 2 or 3 contractors, those dollars into an employee role? And then I would, also question in that situation, you say, like, if the individual is actually pricing themselves correctly, because if they're not paying themselves a salary, they could potentially not be pricing services high enough to cover the cost of the contractors and actually cover the cost of their salary.
Yeah.
So I would push back on pricing too and say, maybe there's a pricing problem on that side, because if you're pricing correctly, you should be able to pay all of your contractors, pay yourself, and still have profit at the end of the day.
And that is correct. That is the first thing that we did with that client was
Yes.
I was like, whoa, way underpricing. Also doing too much work. This is again, a classic thing that women consultants do, over delivering for what they're being paid.
Yes.
And yet still undercharging. I'm like, do not do this much work. Stop doing this custom work. You can codify this work and have a system. So we put in place signature systems, and then we raise prices, and we also let go of that employee. But that's a story for another day. People have to be pulling their weight. And anytime there's stress around paying bills, it usually has to do with that person actually isn't showing up and isn't being valuable. And sometimes that's our fault because we don't know how to maximize that resource. And sometimes it's like, maybe you just did this, pulled in a full-time employee too early in the process.
Yeah. And I can share one of the best ratios, that if you want to calculate a ratio for that, to measure it, to see how efficient are your employees being, or how efficient is your labor, is to calculate something called the labor efficiency ratio. And that's where you take your gross margin and divide it by your total labor costs. So that might be the people you're paying on payroll, and also those contractors that are kind of staff augmentation contractors. It might not include your bookkeeper, like the one-time graphic designer you hired for a logo, but anybody who's kind of that ongoing doing labor in your business over and over again. And that number should always be, if you want to stay profitable, it should be 2 or more. So what that means essentially at the end of the day is that for every $1 of labor, you're at least bringing in $2 of revenue.
I call that
And
the
so,
Neiman Marcus markup. Although Neiman Marcus
yeah,
would probably be more like 1,000. So keystoning is
yeah,
when you double the price. So
yeah.
the contractor is $50 an hour. I bill my client at $100 an hour.
At a minimum. Yeah.
So you're saying that's at a minimum.
At a minimum, because I like what you also need to factor in is any kind of like admin time. Like, are you paying for your contractor that maybe is not a direct one-to-one billable hour?
Yeah.
Like, are they joining team meetings, or are they doing stuff that's like maybe outside of that? So you need to factor in a fully loaded rate. That might also include admin team members or people who are not direct client service. You need to be factoring in all of those additional hours. So, like real basic, and I know that you're not a huge proponent of like dollar per hour, probably more value-based pricing. But at a very minimum, we'd want to see for every $1 of labor, we're getting $2 of gross margin coming back.
Yeah.
And that means like probably not a lot of your clients have cost of goods sold, but if you did, you would take out cost of goods sold from revenue, and that's gross margin.
But I do that with ourselves and with our team, just from a cost standpoint, because even if I'm doing a value-based price engagement and it's $10,000 a month, well, if I put in like 1,000 hours, and so that's mathematically impossible. But my point is, if you put in that many hours, which a lot of people do, you're like, hold on, I'm kind of like underwater in this. So what I'll always have my clients do is figure out how many hours do you think this is going to take? And do you think the client will exceed this? And always build in a little buffer, because as I always say, I'm a time optimist, and I think things take less time than they end up taking. Actually, they take a lot of time. So we need to be a time pessimist when we're predicting how much time we're going to spend on something. So especially if it's you and then it's your whole team, when you're figuring out, well, like, how much is this even going to cost us? Even though that may be unrelated from what the value is to the client, if you're not figuring out what the cost of goods sold is, meaning like how much time I'm going to spend, how much time my team is going to spend, what other things might we include in that, Hannah?
Like any kind of direct billable costs that you might have, like if you are flying to go visit a client or doing a presentation, or are you factoring in your travel costs?
Right.
Anything like if you're preparing a presentation that might have printing costs or something like that, you want to
materials fees. Yeah, exactly. Okay, so then that is all going to be your cost of goods sold. And so I think I'm really glad you brought up that term, because I feel like for a lot of us in consulting, we feel like, that's not me. I don't have like widgets that are incorporated into this, but your time, you want to make sure that realistically what you're spending. And so even though we are not tracking an hourly rate for ourselves, I want you to know that internally of like, I don't show up for less than $1,000 an hour. Okay. If that's your number, then make sure that if this is a $10,000 a month engagement, well, that you're not working more than 10 hours a month, which is totally possible. It can be you as the head of the pyramid, strategically working for 4 hours a month, and then your team comes in and does that for less. But then what are you billing the team at? And so you get some ideas. And then when we get to this profit margin thing that you were talking about earlier, Hannah, we can figure out a profit margin on how much normally am I profiting when I go in and do these, or like retainer engagements, or is my team working too much, and then the profit margin goes down because they're over delivering. And again, I bring this up because women consultants are chronic over deliverers, and that we don't trust that what we promise is plenty already. And it can be hard to raise the price if you're chronically over delivering, because you feel like, oh my God, I'm already really doing as much as I can do. So definitely watch out for that dynamic.
Yeah, and that is really true. Over delivering and then undervaluing are kind of the two main problems. And so then we're working ourselves to death, and then we're not seeing the change in our bank accounts, which is not what we want. We want to build wealth.
Exactly. So there have been fractional kind of like HR people for a really long time. Since I left corporate, I had heard about that, but I feel like fractional CFO is kind of a new concept. And it's a service that's accessible to smaller businesses than might like think they need a CFO. So what's a good situation for someone to be thinking about before they get a CFO?
Yeah, I mean, I think my first question, or I guess what people can ask themselves is, what questions do they want to know about their numbers? And, it might be questions that you can go to your bookkeeper, or you can go to your CPA and you can ask, if you say, hey, I want to know how profitable I am. Like, probably your bookkeeper or your CPA can tell you how profitable are you.
Mm-hmm.
But you might start asking questions where it might be, hey, I want to hire somebody. What can I pay them? And can I afford to pay them? And will I have enough money at the end of the year if I bring on this role? And that's where you're going to start to get the blank stares and somebody saying,
Yeah.
I don't think I can help you with that.
Yeah.
Because it really starts to get into forecasting. And that's where you start to need to have future answers on your current financial decisions. Or you're trying to get, you're trying to look into the future and predict what's happening in the future. And typical CPAs and bookkeepers are mostly focused on historical. So that's where when you start to really move your gaze towards the future, that's where you might want to just engage a CFO. And, I think lots of CFOs have ways that you can work with them in different variations. Like, I would never recommend somebody who's just starting their business to hire a retainer CFO. I mean, like, we might be able to, I'm sure we could return on investment on it, but like at the same time, it might not make sense for that to be the first place you put your dollars.
Yeah. Just too much too
But
soon.
yeah, but you might be able to like book a one-time strategy session with a CFO that can maybe help you plan and get your pricing right from the beginning so that you're not working for a year with nothing to show for it. So, there's lots of different ways that you can work with people. So I think like seeking out like what works for right now is probably a good way to go. And then you can, figure out, hey, I want to be able, like, one of my goals is to hire eventually a CFO. And then you can determine at what point in time that is.
Awesome. Yeah. What do I need to do in order to be able to afford someone who does what you do and have it make sense for the business? Okay. So I'm super grateful for this conversation because I think it's so important, and with every year, I'm on even more of a mission to help more women be financially literate and successful in their businesses. And I know you and I have talked about that. Now, one of the tools that you have used to that end has been your YouTube channel. And when I went and looked at it, I was just amazed at your subscriber count and things like that. So even though it's a little bit of a diversion, I would love to hear you talk a little bit about like how you grew, like why did you start a YouTube channel? What made you think of that? And then how did you grow it in such a short amount of time?
Yeah, YouTube has been a fun journey. So I actually started the channel in 2018, but didn't really do much with it. So it was at the beginning of 2020 when I was like, I actually had one video that kind of like it had 7,000 views or something. And it was a walkthrough. Yeah, it felt like a lot to me. And I had probably like 50 subscribers at the beginning of 2020, maybe even less than that. It might have been like 25. And I was like, that one video got 7,000 views and I got a few affiliate sales off of it. And I was like, well, maybe I should like make some more YouTube videos because maybe that would be an interesting thing to do for people. And maybe it's a great marketing channel for me eventually. And then I had thrown a couple videos up on some profitability stuff. And then the pandemic hit March 2020. And with that, all of the stimulus packages came out that were, Paycheck Protection Program and the economic injury disaster loan. Those two programs were extremely confusing for people.
Yeah.
And more than that, the PPP was first come, first serve when it was first it still was first come, first serve the entire time. So knowing that I had been working with small businesses and I was in my clients were in a fortunate position to have somebody on their team who was aware of this stuff. But I knew the vast, vast majority of small business owners would have never known about something if somebody didn't say something to them. Right. Bookkeepers and CPAs a lot of times were not even knowing, and they were in the middle of tax season, and they were in the middle of March 2020 is like the busiest time ever for CPAs. So like they didn't even want to touch PPP because it was like they were trying to get tax returns done. So it was a very interesting time to have all this come out. And so I did a webinar with a friend and we were like, hey, let's just post it on YouTube and tell everybody we know, get the word out. Like, you guys need this money. And then I started to explain stuff. And then after one YouTube video, it was like, oh, this is getting views.
Yeah.
Okay. And then more questions were coming up, and then more guidance was coming out, and then more guidance and more questions and more guidance. And then it just became like, I was like, this is my public service at this point in time to tell people about this program. And it felt very gratifying because I was helping people very directly, and they were like, oh my gosh, I never would have known about this had I not watched your video. I got $150,000 to save my business. Like, this stuff that was like,
Yeah.
game changing for so many people. Even people who were getting $5,000, $10,000
Yeah.
was game changing for them.
Yeah.
So that was driving all of that. It was really just like making an impact, and that was a core value in our business, is making sure that like we are helping people actually change their financial futures and their financial outcome. And YouTube's been just an incredible place to do that. And so that's how the channel grew really fast, is it was helping. I mean, that's really what it was at the end of the day.
Yep. I love it. I really love it. And I loved when we talked about this the other day, just sincerely like answering questions that people have. And I think so often when people are thinking about content, they like overthink it. And it's like, well, what are the frequently asked questions? And I'm like, no, like, don't be afraid to give away information, because it's a commodity. Like, you are the unique resource in it. You are the brand. You are the differentiator. Information is out there. So I'm like, share all your information, and your channel is so like resource rich. How many videos do you have up there now?
It's probably like 250. I don't know. I'm not exactly sure how many I have, but it's definitely over 200. I got a
Right. So
notification
just
saying something like that.
tons of really good information. It's like a one-stop shop, like just a great resource. So I really wanted you to share that. So hopefully others who are experts in their area will be encouraged to just make that content for those users who are, your clients who are out there and who are looking for information and they're searching for it. So, YouTube is a huge search channel. You probably do titles according to, or topics according to what people are searching for, so that they're keyword rich and people can find you. And I noticed that you have been recently adding some reels. So the short form YouTube shorts is what they're called. Yeah. So how are those performing for you?
I mean, those are actually great. I actually think that so I don't monetize or anything like the YouTube shorts. What I like about them is they can just be really quick thoughts, and you just kind of throw them out, and people will view them. And I think what they are doing right now, I think YouTube is recognizing and wanting to promote people who are using shorts. So I think a couple shorts actually boosted a video that I had that like made it go like semi-viral. So like viral for me. And the amazing part about it is it's actually one that I get a lot of affiliate sales from now. So it's interesting because it's driving ads, and then it's doing that. But and it's helping a lot of people like get set up with accounting systems, because like that's the number one thing. A lot of people aren't even tracking their numbers in accounting systems. So I think YouTube Shorts actually kind of like drove that traffic a little bit. But they're great because they can answer a question. Like you can have a real quick, easy question. And I just did that with something, and it was like, oh, it's maybe not the answer you want to hear, but it is an answer.
Hannah's referring to a short that I commented on the other day. The question was, do you have to keep credit card receipts, or is the statement like good enough for the IRS? The unhappy answer was, yes, you still do need to keep receipts, because, and I thought your example was amazing. If it's like from Amazon, your credit card is just going to show stuff coming from Amazon, as mine does constantly. And some of that is business purchases, but some of those are personal, and we don't want to commingle our accounts. So it's going to be very hard to go in there and figure out what the difference is, and was something really that. I was very unhappy with that answer, just as I was unhappy with my new CPA, who, when I said, do I really need to keep any receipts at all, or can I just, isn't my Bank of America, I mean, my bank statement just plenty? And she was like, no, you have to take pictures of everything. I was like, oh, dreadful. But if that's like the heaviest part of owning a business, and it is, then so be it. But it was short, it was to the point, and it was helpful, and you had a great example in there. So I do love YouTube Shorts as a medium, and it's such a kind of like an easy way to just get in there and get started with making video.
Yeah, absolutely. And I think all the platforms are giving an opportunity for that. If you're on TikTok, if you're on Instagram, I mean, there's lots of, I mean, even on Facebook, you can do all of that. So there's a lot of opportunity. And I mean, I'm just kind of swinging back to your comment about giving away information. I think it's so great to give away what you know, because then, what that does is it creates a spirit of generosity that's like, it comes back to you, like if you're giving, people recognize that to some degree. And then also like, they know that if you're giving that much away for free, you got a lot more trapped in your head that you can probably help a lot with, so I think people really understand that. And then it develops a lot of trust. It develops a lot of trust with your audience. And one thing that's been cool about YouTube is it does grow the consulting side of my business as well. So people will be like, hey, I watched your video on the EIDL loan, and I was like, hey, I understand this person. This might be somebody trusting that I could trust to help me with my finances.
Yeah.
And I've gotten some really wonderful long-term clients out of, doing something that, never thought would bring clients my way, but it definitely is. So
there it is. Yeah. And you're great at it. So, besides, I want to hear what's a good way for everyone to keep in touch with you, but I definitely want everyone to go take a look at your YouTube channel. So it's Clara. Yeah.
Yeah. So it's at Clara CFO Group. And you can find us there everywhere, but at, on YouTube, if you just type in Clara CFO, CLARA CFO, you should be finding us there. And yeah, we'd love to have you subscribe. We typically do weekly videos, so that's how we're doing it. And then the shorts are a little more ad hoc. Sometimes they're like, just got done with a workout and I had a thought. And that's the other great thing about shorts too, is like, they don't have to be professional, edited or whatever like that. You can just kind of turn on your video and start talking and, answer a question. So
I couldn't have said it better. That is exactly what I want everyone to be doing. Don't overthink it. Don't overproduce it. What people connect to is you. And super great information, Hannah. I've really enjoyed it. Any last words of wisdom or advice for our listeners?
I just keep encouraging you guys to keep doing what you love and act in integrity with the work that you're doing. And as you are able to serve more people, it's just, keep going. And also like recognize your value. I think that's the other thing, is that sometimes you're going to be the last person to probably fully understand the value of what you're bringing to the table. So if you need help with someone else pointing out the value, hire that help out and say like, hey, what is this? Because sometimes as business owners, we get in our way and we become the biggest problem of being able to charge what we're actually worth. And so I would encourage you guys to get help in that if you need it. So
definitely. Yeah. Awesome. Thank you so much, Hannah. I super enjoyed it. I love this topic. And the more, we can break it down and simplify it and make it accessible and available to consultants who need this stuff. So
absolutely. Yeah. Well, thank you so much for being willing to have this conversation, for also like reiterating it over and over with your audience, because it is a very, very important one. So thank you for having me.
Awesome. And with that, Hannah and I are wishing you a profitable and joyful consulting business. Thanks for watching. I'd appreciate if you'd like this episode, and if you enjoyed the show, why not subscribe? Be sure to click the bell to get notified when new episodes drop.